Hi traders, in this video we're going to be looking at the bump and run reversal candlestick pattern. This is a very powerful candlestick pattern that can help you catch moves such as this one for over 150 pips. It's a relatively easy pattern to spot on your charts. So here I have a Euro dollar 1 hour chart. First thing you need to do is to find a trend. So we have a strong uptrend here. If we just mark the most recent levels of support to form this trend line you see here. Okay, so this was a significant trend. There's many ways we could have traded this particular trend. I have lots of videos that show you how to identify trades, time your entry, money management, etc. So the bump and run reversal candlestick pattern is basically a reversal from a trend. So we're going to wait for this trend to finish and try to enter on the sell side. So with the bump and run reversal candlestick pattern, first you need to find a part of the trend where there's a bump, like this candle here. So this area here, following on from the uptrend we had, and a big bump up is almost signifying that perhaps the trend is going to be exhausted and come to an end, and the market will start reversing. Okay, we can see that there was a level of resistance formed here, and we had our lower highs, as you can see there. So the market started to head in a downwards trajectory, and we're going to wait for a break of the trend line for the entry. So we've marked our trend line there. Okay, so the reversal occurs on the breakout of the trend line in the bump and run reversal pattern in the opposite direction. So we're going to try and get into the new trend at the earliest opportunity available, which would be around here. We also have a good level of support there. You can see this area here has been tested multiple times, so we can be confident that if we have a breakout through here and here, there's going to be lots of momentum to push the market down. You see that this support level eventually becomes resistance here. This is a 1 hour chart. I do find price action, support and resistance, trend lines, and even technical indicators to be more reliable on the higher chart time frames. You can find this bump and reversal pattern on any trading instrument or chart time frame. It's just that with the 1 hour, 4 hour, daily, weekly, monthly, it's less time chart watching and more reliable signals from my experience. Okay, so once we found this bump and run reversal pattern, there you go again. Have a nice uptrend. The bump up there, that's the bump there, and the run is the price runs away from the high. We make lower highs and we have a breakout here. Nice M chart pattern formation there as well for further confirmation, and this would have been a good entry point with over 130 pips profit potential. We would have probably exited around here somewhere. You see a big reversal back. If you did stay in all the way, you could have had 150 pips, but this pullback here would have probably triggered most people's stop loss. The reason I say that is because let's just say your initial stop loss is above this breakout level here. Okay, we trade the break on the trend line with the bump and run reversal. So if your stop loss was here, as price moves down, say to here first, it would be break even plus maybe half of this move here. And as price continues to drop, we'd be moving our stop loss above these highs. So price drops, stop loss above the high here, and just locking in profit on the way down. So we don't want a trade to turn around and either take us out for a loss or break even. You can always close part of the position on the way down. To be honest, when you start seeing this consolidation here and this range in market, you might be thinking it's time to exit the position anyway. There's lots of indecision in the market. You know, the trend starts to move in an upwards direction. But that just shows that the bump and run reversal candlestick pattern can help you catch some big moves. It's relatively easy to spot. It's just look for a trend, look for a reversal. Of course, there'll be instances where the reversal doesn't happen and price continues heading in the direction of the trend. So for example, if we did enter a sell here and then the price turned back around, we'd have a tight stop loss, just minimizing the potential loss on the trade. I like to cut losing trades short and let winning trades run, like I showed you in this example. That way we get a favorable risk to reward ratio. We don't want one bad losing trade wiping out loads of gains. Okay, that's another advantage to trade in the 1 hour charts and above, because you can catch bigger moves. And if you time your entry well, you can still use a relatively tight stop loss. For example, this move, let's just say you took 100 pips from this move by exiting around this area of consolidation somewhere. Say you took 100 pips with a stop loss of 10 pips. You know, that's a really good risk to reward ratio. Imagine on the 5-minute chart trying to gather 100 pips with a 10 pip stop loss. Or if you have a 10 pip take profit, let's say, that's going to have to be 10 consecutive winning trades. Not to mention brokers, fees, spreads, commissions, etc. Okay, so here's another example of the bump and run reversal candlestick pattern. Again, very basic. We look for a trend. You can see here there's a significant downtrend. We mark the highs here, here, and here, the resistance of the downtrend. Draw our trend line, and then we have the bump here. You see this bump? Bump down there. Then the reversal to the upside. Nice level of support formed around here. Okay, and if we took our entry here, you can see that we would have been able to catch this move here for over 180 odd pips. This again just shows the strength of the bump and run reversal candlestick pattern. One of the things I like about it is you're not just trying to guess where the trend is. You're looking at the trend in the past and just marking levels based on that. Okay, so you don't need any complex technical indicators. It's just all based on price action, which I like as well, because it means that we're not relying on lagging indicators. You can use candlestick formations to confirm your entry. Here we have 3 white soldiers formation, 1, 2, 3, 3 bullish bars, which suggests strong bullish momentum. We have a bullish candlestick pattern there as well. Then a nice breakout of the trend line, confirming the bump and run reversal pattern, and a nice trade there. Again, 1 hour charts, you can catch big moves like these for hundreds of pips without needing to chart watch all day. Okay. If you weren't going to be at your charts and you've seen price around here, you could always place a pending order based on the trend line as well. And as always, sensible stop loss. I probably would have put my stop loss around this low here. And then as soon as possible, as soon as I start to see this move here, I'd put the stop loss break even and trail the price as we did in the sell trade. So once price shoots up here, put the stop here. When we're up here, maybe the stop loss will be here, and we'll just maximize the move as much as possible until we start seeing this consolidation, lower highs forming, bearish candlestick patterns, then we'll look to exit the position. Okay, so hopefully in this video you've got an idea of the bump and run candlestick pattern. I mean, it's very easy to spot, can help you get into new trends early. Just make sure you've got sensible money management in place to maximize the moves when they occur and to limit losses. As I said, you can use it on any trading instrument and chart time frame. I find from my experience the higher time frames tend to have more reliable signals. Hopefully you found something useful in this video. Appreciate you watching. Please like and subscribe for more. Catch you on the next one.